Stock that came under a lot of pressure today was Kenya Airways. We know that yesterday the court ordered Kenya Airways to reinstate some workers, but the workers there on that front rejected this offer.
Yes, indeed, Mashudu. Good afternoon to you. Kenya Airways has indeed come quite under pressure on today's trading session. The stock was down about 3%, but that was a notable move because in term one, it was the largest loser of the day, and secondly, because of the impact that that move is going to bring in when you look forward at the company's projected financials. The company had expected to save about 1.3 billion shillings, and with the court reinstating this particular move, it just doesn't augur too well for the stock. At half year, they had made a loss of about 4.5 billion shillings. So it's really not a particularly good spot for Kenya Airways to be in, keeping in mind also that competition is really coming through in a very tough way. We have big players such as Emirates coming in with a proposed low-cost budget airline. So this in all is news that is not particularly good for Kenya Airways. We have that stock at slightly above 11 shilling mark, and we expect that to continue coming down, though for the contrarian investor, it is one to start looking into as we approach that 10 shilling mark.
Indeed, I was about to ask you, would you be getting into Kenya Airways at this time, or would you be waiting for it to even fall further below that 11 shilling mark?
Yes, I think I would hold my horses and look at the dynamics in all as I wait to get into Kenya Airways. A lot of analysts and commentators and investors want to see it even below the 10 shilling mark. So in all, it is a bit of a wait and see. But when you actually look at the company's fundamentals, when you look at its PE of about 3 times, it looks like quite a decent buy, especially if you get into it for the long haul. But when you look at its historical trading, the company has really taken a battering. It's down 44% year to date. If you look at 5 years, 5-year duration, it is down about 70–80%. And when you go back as much as 8.5 years, it really is at an all-time low. Remember, it touched highs of about 120 shillings. When you go back about 9 years ago. So in all, Kenya Airways has really seen a tremendous erosion of the shareholder wealth when you look at it on a long holder's point of view. So for now, it is still a wait and see, especially with big caution on this particular court reversal of the employee layoffs.
Indeed, Kenya Airways has been in the news this year, feeling a lot of pressure. Let's look at oil marketer. We've got Kenyan Cobalt losing market share to Total at this stage. We had news reports saying that, well, this loss of market share really because of a promotion that Total Kenya put out on the in August.
Yes, actually it was an offer from Kenyan Cobalt. They had a huge discount promotion running for the better part of the year, and that saw them drive in a lot of volume from the retail end. Everyone would fuel their vehicles at Kenyan stores, Kenyan outlets rather, once or twice a week, and that really drove in a lot of retail volume on Kenyan Cobalt's side. So that really saw them gain the #1 position as far as market share is concerned. But from the end of that, we've seen the market share position erode slightly, and Total regaining that particular position. Now on Kenyan Cobalt, there has been 2 particular key developments over this particular year. One has been the huge acquisition from Puma Energy, who are still in talks to acquire the particular company. But the second has also been in relation to a court case whereby employees have gone to court seeking some protection that once that particular acquisition goes through, that they won't be tossed out the door. So those are particular issues to watch out on Kenyan Cobalt. But if we come back to Total, it is now once again the market leader. It's very big on LPG, on the LPG side, and unfortunately both counters actually reported losses as far as the half year is concerned, in part because of the taxman's change in position that really requires them to have much more working capital. And in all, we really are looking out for the energy sector, which has an average sector PE that is quite below the main market PE of 10. The energy sector is coming in at about 7. So if you look at this particular dynamics, I think both counters, one would really look into them as potential long-term buys.